When you come in and you do a business evaluation, what does that look like? What are you evaluating, and are you evaluating the value of the selling price? What does a business evaluation mean?
Well, business valuations is usually got three types. There's like market-based, there's cash flow-based, and there's asset-based valuations. We do a very comprehensive one that's all three. It's algorithmically based. We have a license with a company called BizEquity. BizEquity does this. They charge about $1,000 for these things. We include this for people that we take on as coaching clients as part of getting them set up. So we do this business valuation. They have a report, it's about 39 pages long. That also includes these key performance indicators. And then it becomes part of the strategic plan that we work with our client during the first month of coaching. During the first month of coaching, we're going to write a strategic plan that has congruence to the life goals of the business owner. Ultimately, the sale of their business is an event in their life that is supposed to finance their lifestyle or, their ultimate, purpose of their life. And a lot of business owners, particular technicians, don't even think about why they're doing it. They just like doing it, and they just go and do that. But if you step back and think, why are you doing this? Ultimately, if you want the ultimate lever, you really need to leverage your time. You have to remember what Nietzsche said. Nietzsche said that if you want to overcome any how, you have to have a strong enough why. And so we start there. And then from that, how does the business serve that? And how the business serves that is the strategic objective of the business. And the strategic plan is the incremental step towards that strategic objective. That strategic objective may be the big, hairy, audacious goal to sell it in 10 years for $150 million. Well, how are you going to do that? Well, first we got to get our prototype, and it's got to be generating, $10 million. And then we're going to make 14 more of these around the country. So $150 million internal rate of return. Then we're going to take it public, and we're going to get a 3-time multiplier in equity. And our equity is $50 million. So it's a $150 million valuation. Now we have a liquidity event for the shareholders. That's one version. Another version might be it's a mom and pop business. We're going to get it up to a certain cash flow level. So we're the strongest restaurant in this particular part of the city. And then we're going to offload it to a big conglomerate like Darden Foods or somebody that's going to take our thing and prototype it for a franchise. So it could be any number, or you can say, I'm going to franchise it. In growing the business, we have to first have a gap analysis and a strategic plan and a time frame to do it. Then we have to develop a revenue and profit budget, which is a budget that doesn't just include, kind of a pessimistic financial forecast and fixed and variable expenses and EBITDA and taxes and everything. At the bottom, you also have to have working capital, and you have to calculate how much of your profits you're going to capitalize. So if you hire a new person, you have to buy a computer, you have to get a desk, you need more office space, you have more expenses. And those have to be built into the budget. And if you have a very good revenue and profit budget, a good unique selling proposition and guarantee, and a good strategic plan, those are the basis to write your business plan. And you want your business plan to be current. Now, there's a lot of different things. One really good app is called Live Plan. You can tie it directly to your QuickBooks file, so you have a real-time living business plan for your business, at least financially. It pulls right into it, and it can give you a real good sense of it. It's also very humbling because it's going to tell the absolute truth based on data, and a lot of people are finding out they're not doing nearly as good as they think they are. We also want to have a good accounting, a bookkeeping and accounting system in place to do that. And then you really want to begin with the end in mind. You really want to be thinking about you're selling the business or you're going public with the business, but you're going to think about the liquidity event that is the purpose of what you want to take out of the business. And if you have multiple partners in a business, that's the time to have this conversation is at the very beginning. One of my larger clients have 3 executives that we coach, and I personally coach them. What we had to do was do one of these primary aims for each of the owners, and we found out each one had a different getting off the elevator. Some of them only wanted to leave at 18 million. Another wanted to leave at 34 million. One was only ready to leave at 5 million. And so wouldn't it be nice to know that ahead of time? Because the guy going to 38 million's, working like a maniac, like his hair's on fire and he's looking for a pond. Where somebody that's looking at 5 million, it has a different time log and a different time frame. And so the urgency is involved.